Hey, everybody, Russell Gray, co-host of the Real Estate Guys radio show. And I'm here today with my good friend, Bob Burr from Panex Oil. Hey, Bob, how are you?
Hey, buddy. Fine. How you doing?
Good. Excited to talk with you. We got into a conversation the other day and you said, hey, you know what? We've got this situation where we've got this deal we have these deals where people can do 1031 tax deferred exchanges. And I thought about that and I thought, God, that makes a lot of sense because just looking at oil in the macro right now, please correct me if I'm wrong. You're the oil guy. I'm not. I'm a financial strategist and I just kind of look at the macro picture and try to figure out where the opportunity is going to be. But I know that over the last several years, the United States, created a lot of wells and became a top oil producer. And then we ran into a thing called COVID, and a lot of those wells came offline. We had a glut of production that drove prices all the way down to negative territory, and you wisely snapped up a bunch of production, and we'll talk a little bit about that. And then as the supply issue began to manifest and the economy opening up, it seems to me like that's a perfect setup for pressure, plus all the money that the Fed is printing, a perfect setup for rising energy prices, which of course is for your producer. That's a good thing. And then it's like, okay, well, how do you get in the game? And you said, well, you could do a 1031 tax deferred exchange because I'm a real estate guy, right? So, 1031 tax deferred exchange to me is like, okay, I'm going to trade one apartment building for another apartment building and move my equity. But in reality, that's not the way it works. So you told us about this friend of yours, Brad Simmons, who's actually done this many, many times. So we've got Brad on a phone line here. He couldn't make it in by video because he's literally out in the field doing what he's supposed to be doing, and so Bob, before we get going with Brad, just talk a little bit about where the oil industry is right now, the beginning of April 2021, and what you're seeing in terms of the opportunities and some of the steps you've taken over the last maybe, 24 to 12 to 24 months, where you're positioned now and what you see coming.
Well, basically, when the oil prices and Corona came to being and the pandemic hit, you had a lot of medium-sized operators. Well, really, most operators that were frightened, scared. They'd never seen a negative market in oil and gas, and that created a tremendous opportunity for us. Uh, we know when to play, and we know when not to. And so Bradley Simmons, well, I'll introduce just in a second. He was our lead guy, and he's the man that runs the actual properties. He's a 35-year-old oil man, graduate of Yale, just a brilliant oil guy, and knows economics as well as anybody I've ever known. When it comes to his business, our business, the oil and gas business. 2 weeks ago, and Brad will correct me if I'm wrong, but there were 60 to 80,000 acres of federal leases in Louisiana that the government took back and made undrillable from the state of Louisiana.
That's correct.
Out in the Gulf. The scary deal is the chalk wells, the wells that they're fracking real heavy, Eagleford, down in South Texas, Colorado. Their lifting cost is very, very expensive. Cost to lift that oil out of the ground is anywhere from $25 to $40 a barrel. So they're very, very slow on getting back into the oil side of the business. And so we're just sitting there. We've got the properties. I was talking to Brad the other day about the 1031 exchange. Brad's done several multi-million dollars in this business. Our contact out in Midland that we'll get Brad to review in a second is one of the largest in the country. I'm talking about billions of dollars of business. They know their business. We know the business. Brad knows the business. And primarily that's what we want to do today is talk to giving your people, your syndicators, another option, so to speak, instead of rolling their property in a light can apartment building or an additional real estate property. They need to know what they can do in the oil and gas.
Yeah, so this is why I wanted to do this because we have at the Real Estate Guys been, I think, probably on the forefront of helping real estate investors see the bigger picture and then understand that real estate is important. It's the foundation of a real asset portfolio, but it isn't the only asset available. And there are times when real estate gets a little overheated. I think you could make the argument this is one of those times. Investing is investing. We look for supply and demand imbalances, opportunities to buy below the cost of production. Those same techniques, those same strategies, those same opportunities exist in other areas like oil and gas. And you can make the argument all day long that oil and gas is, in fact, a real estate play. Mineral rights, things come out of the ground. You're working with property, no different really than farmland. It's just that, or mining, those are all real estate plays also. So we talk about all those things, but the reason it's significant right now is because of the shift in administration. And we've got a new sheriff in town who has a different view on fossil fuels and fracking and all of that stuff. You just mentioned what I had been reading about anyway, that the production is coming offline, but the global need for oil is really not going away. There aren't really viable alternatives to fossil fuels yet. Everybody wants that to happen. There's all kinds of R&D money going into it, tax credits. You've got people all wanting that to happen. But in the real world, right, people are still filling up with gasoline. It's being used everywhere, and you've got a decrease in production. At the same time, you've got the opening of the economy. So again, I see this tee up. The other thing is, as a strategist managing a portfolio, there's going to be times where you say, okay, I'm going to move out of this asset, or I'm going to move equity. And you can move equity two ways. In the precious equity series, we're talking about using cash out refinances to reposition equity into precious metals to take advantage of what we think is going to happen as a result of all the money printing. All right. So that's a strategy. You want to keep the property, but you want to move the equity. A 1031 tax deferred exchange is when you've decided, hey, I'm done with this property and I'm ready to go pick up something else, but I'm not ready to go buy another piece of property. What else could I do? And when you told me about this, I thought, this is great, because I know that, you guys timed everything really, really well, but didn't know that you could do this 1031 tax deferred exchange. So Bob, why don't you introduce Brad, and then I'll let Brad kind of fill in the blanks of his background, so that then we can get grilling him, because he's the guy that's actually done this, many, many times.
That's good. We will. Brad, what as we visited earlier today, I want to just a thumbnail sketch, no details, basically how it works, why it's an option, a very good option for the syndicators of real estate or the owners. And Brad is our guy. He has the contacts for the folks in Midland. So Brad, if you would take the stage and start off at A, and let's go through wherever. And here we go.
Will do. First off, Russ, it's absolutely a pleasure to talk to you. You're well known in our neck of the woods, and you guys have knocked it out of the park for a long, long time. And it's a pleasure to talk with people that are at the top of their game. So we'll as far as myself, I was a poor East Texas kid that ultimately got his way through school and college and taking care of a family. I mean, kind of the rags to riches kind of a story there. It's not well known or acknowledged that I'm just another oil guy out there drilling my wells on the ground. But on the other hand, the Yale finance background comes in handy from time to time, and it's been a good blend. I've built a number of oil companies from scratch up to quite large companies over the last scary 40 years. The last one being a company called Maverick Drilling and Exploration. We took from a little family business, a little $7 million family business back in 07, 8, and 9 during the crash of the GFC, acquired aggressively for cheaps during that period, took the company public over in Australia in 2010. And by 2012, we were the number one performing stock on the entire Australian stock exchange with a market cap over $600 million.
Wow.
So that was from 09 to 12 was a good run. And that's the leverage and the multiplier effect of being, I'd like to say it was brilliant, but I think that luck, the harder we work, like you said, the luckier we get. So having that model of the past, Bob and I teamed up about a year ago, looking at, we could see that we could read the tea leaves of what was coming, not to the magnitude that it hit, but and we started picking up fields for pennies, properties for pennies on the dollar, doing it just all over again. So this is not some wildcat idea. This has been a proven model over the cycles.
Well,
Not unlike you guys.
Brad, I appreciate you just bringing that part up, because a lot of times investors, everybody's brilliant when the bull is out there running rampant, but when things go sideways, I think a lot of people just curl up in a ball and wait for the market to prove itself. And the brave and the bold, the people that are seasoned, that are experienced, that understand that the flip side of all of the problems that exist are opportunities. We did the COVID-19 investing series and interviewed a whole bunch of people, last April, a year ago now, when this whole thing was breaking, because we wanted to see what the people who were reading the tea leaves, as you say, were thinking. And we were watching the moves people were making. And my experience, and I've been around, a while, is that a lot of times the best deals, the best opportunities, the most money is made when people wade into a crisis and find the weak hands that are holding quality assets, but don't either have the resolve, the courage, or the resources to hold on. And what I hear you saying is that you did that through the great financial crisis. We saw a number of people. Kenny McElroy, good friend of ours, did wonderfully well in the real estate space coming out of the great financial crisis. Everybody was selling, everybody was in trouble, everybody was undercapitalized, and he waded in with $300 million and picked up gobs of properties and made a fortune. So, and again, to my point earlier, this is the type of thing that can happen in other industries, and why I appreciate talking to guys like you. So, again, just reminding, you and everybody that we're talking to real estate investors, and they kind of don't really understand the oil business. So I'm here as an interpreter, and I may interject from time to time to make sure that people are tracking, but the concept is the same. Real estate investors understand the concept. And so go ahead and continue, because it's great. And where are we at now? What do you see, and what's happening, and how does this whole 1031 tax deferred exchange work?
Will do. Uh, we try to listen to people, we consider to be the brightest, in our, not only in our sector, but in sectors like yours. And what happens down here, especially in more the Texas environment, is that the really smart money, extremely wealthy, have a little different cut on the normal position of the standard real estate investor, especially on 1031s. Because we listen to folks say, well, I was going to think about a 1031, but I didn't want that pressure of like 45 days after I sell to go try to find something. Why am I going to, sell my overvalued real estate and have to go buy some other guy's overvalued real estate? I mean, there's kind of that mentality of apprehension about it. But in talking to the real savvy big hitters, and I relayed that to one of them, and they said, "What do you mean? We buy out in front. It's called a reverse 1031." And I'm like, "You got to be kidding!" I said, "No, you don't have to buy and then get the money's in the intermediary. You find in 45 days, you got 6 months to close." To the contrary, the reverse side of that is they go find their landing spot first, tie it up through the same intermediary. And I don't know, there's going to be a sophistication ranges through the folks that we're talking to, but you don't have to go through that pressure. You can pre-plan, and the real savvy guys are out there doing that. They never leave anything to question. So Bob and I were talking about now, as far as my position, I run Burright Acquisitions, subsidiary of Panex. I'm the field deployment guy. I'm the asset manager side of our business. And occasionally I get into this part of it and tag team with Bob. But as far as the networks that we have, we try to listen really well. And the idea of front positioning before when you do that, I mean, and I know I may be preaching to the choir here, but there's the issue of a reverse is still completely a like kind, where in your world, you find a real estate property you want to 1031 into, you can buy it, put it in place through the intermediary. Within 45 days, you designate the property you're going to sell. And you have 6 months to close it. And that's, instead of trying to be pressured into what's next, you've already got what's next. And that's a case of always analyzing opportunities, not just when you're getting ready to sell something. So that's the simplicity of it from this side. Now within Texas, I can just personally in advising extremely wealthy families here during one of my 4 retirements, because I've built a number of companies from ground up to substantial and retired, couldn't stand it, got back in the business. And in the case with Bob and I, when things went negative, I'd been sitting on the sidelines and advising and just kind of piddling on retirement on my ranch, and thought it was over. I couldn't stand it, so we teamed up and went in, and we've been buying fields for pennies on the dollar. And that still hasn't changed yet. There is the industry is still in depression mode here. No matter what you see on the TV screen about oil prices, the patch hasn't gotten the memo yet. And it takes a long time to turn around the devastation that's occurred here. Most of our industry has legacy debt from the boondoggles and the shales and the chalks and the unconventionals. Tens of billions of dollars have been lost and overhyped. There was only about, from our estimates, about 5% of the shale players that made money. So the bankers have got some real dilemmas ahead. Those haven't gone away.
Yeah, Brad, it's interesting because I started paying attention to oil initially because of just trying to understand the dollar, the petrodollar,
Yes.
understand inflation. And then I began to realize how much debt there was on the shale side of the business and how debt driven it was. And it was the cheap money that was facilitating all of this production. And a lot of these companies were not even really profitable, but they were able to continually borrow to kick the can down the road. And then I started saying, gosh, these people are really exposed to interest rates. And I remember writing a newsletter saying, could this be the next subprime? Could this trigger substantial defaults if there's a whole bunch of oil debt out there and we get a drop in price and these loans default? Are they hypothecated, to the nth degree, the way subprime was back in 2008? And so I started watching for that. And of course, ultimately, you have to get in touch with people that are what we call boots on the ground, folks like you, people that live it, that understand it. You can only learn so much reading, oilprice.com and paying attention to the Wall Street Journal and what the mainstream media is saying. And pretty soon you've got to kind of compare that to what people are seeing. And when I met Bob and he started talking to me, I had to learn a little bit to talk Bob Burr. It took me a little while to understand, some of the things he was saying and some of the things he was doing. But what I recognized was the parallels between the strategies you use in finding bargains in real estate and markets and what you guys are doing on the oil side. And the more I've learned, the more I get excited about it. And again, when Bob said, oh, you could 1031 exchange these things, I'm like, wow, let's do a video on that. So I know you're not a 1031, intermediary. You're not a CPA.
Correct.
You're not a tax
No.
advisor. We're not giving anybody that. You're an old time oil guy that understands the cycles. And you understand that when you're out there in acquisition mode, like any syndicator, you are looking for sources of capital. And sometimes it's going to be debt. I know Bob's put together an oil bond that is really, really unique because it's indexed to the price of oil. As the oil goes up, the yield goes up. If anyone's interested in learning more about that, they can send an email to oilbond@realestateguysradio.com. And Bob has some information available for you on that. You can do the equity side, which of course, depending on what you do, there can be great tax breaks. And Bob and I've done a video with his CPA, Dan Looney, and talked a little bit about that. But this 1031 exchange is really kind of interesting. So are there limitations? Are there limitations to when someone wants to do a 1031 in terms of the type of property or the type of project they can get involved in? I know they can't 1031 in on the debt side. They got to go in on the equity side. But there any other concerns or considerations an investor ought to be aware of?
This is a good point. And your analysis you were discussing earlier is spot on in our world. So we are a niche player picking up quality properties. We're not unconventionals for that side of the picture. You want to look at uh, long-term revenues and reserves. And I can give you a few more kind of aspects of that to kind of fill in the holes for the folks that are listening on something that may apply to them. Is that some years back, I was out at an investment conference, which I don't do a lot, but it was a dear friend had asked me to come out to talk about the energy sector. And I was sitting in this group with a gentleman that had bought a postage stamp of property. I'll just give you a simple example in Malibu. And for $800,000, you're not going to buy much. I don't know how long he held it or been in it, but he was going to sell it for 3.2 million, which I thought that's pretty good lick. But he 1031'd it into an oil and gas property, which in this he was looking at about a 25% per annum that's kind of a blue book kind of a metric over in the side on buying production. So he went from a property bought for 800,000 and was 1031 tax deferred, just moved it over, and he was making about 800,000, and actually prices had come up, and he was at that point I was sitting with him. He was getting net per annum over $1 million, and the projected life on that property was 15 to 20 years.
And that's $1 million a year income, Russ.
Yeah, all on a $3.2 million equity move, right?
Yes.
With
Yes,
no
or he
tax,
pays
no tax, with an
$800,000.
$800,000 basis,
Yeah.
right? He gets 4x on his real estate and then moves it over into oil and gas for cash flow, and never had to pay tax on the gain. That's phenomenal.
Man, that's what Brad does for us. He knows the properties, he knows how to structure it. We have the intermediary folks in place, but they're creating cash flow. That's really strange for a real estate guy. I've watched them, and hell, I've got 2 subdivisions I'm doing. I've been in them 3 years. I'm gonna make $1 million. Guess what? It's another 2 or 3 years. Now I can take that same money and I'm selling my building. I'll 1031 it into oil and gas immediately. Producing. They got reserve studies. We know what we have. And immediately Robert Burr is going to get about $30,000 a month income. Damn, I'm ready for some income. I mean, I'm tired of this. I'm going to build.
And Bob, the thing is, I mean, for the real estate investors out there, I mean, we all are experiencing these extremely low cap rates. And if I'm out there running around trying to get yield on apartments to get the deal, I've got to bid up. It's super competitive, and I can't really bet on my financing saving me. I'm not going to see a big decrease in interest rates. It's going to improve my cash flow. I can't imagine in this current administration that we're going to see benefits, tax benefits beyond what there's already existing accruing. In fact, some may be going away as far as real estate goes. So that's a concern. And then the other concern is you just have the jobs market. I mean, yes, the economy is booming, but there's a lot of stimulus that's underneath that as we're recording here in April of 2021. And the big question is going to be, what are wages going to look like? What is consumer spending going to look like? What is the ability of tenants to pay rent going to look like when that stimulus goes away? Well, we don't know. We don't know. But the one thing that we do know, like farmland, is that energy and food are needed worldwide all the time, no matter what the economic situation is. And if you can buy the property, buy the production, buy the commodity at the right price and lock it in, and you believe that population is going to continue to grow, that emerging economies are going to continue to expand, then even if the oil, even if the food is being sold to India or China or wherever the people are, it's a little bit different game than real estate, where you've really got to nail that local market. And if the local market does something stupid, like raise property taxes or change the landlord tenant law, or do something that makes it business unfriendly in the tax rate, or even resident unfriendly like the tax rate, and people start to move, that property is not easy to move, but the equity is. And that's what we're talking about, is when you see that coming in your portfolio and you say, hey, I've got a property that is in a market that's moving in the wrong direction. Don't wait. Don't wait till the last minute. Find a way to get out and do something else. And this gives you the opportunity to get involved in a commodity, oil, that is really well positioned right now for the next several years, I think, because of what's happened in the production and because of what's going on around the globe. Again, I'm a little bit of a novice, but I've been studying this for a long time. So it kind of makes me feel good when old oil guys like you say, yeah, your analysis is spot on. I mean, I do study, but I do see a lot of opportunity. That's why I keep coming back to you guys, because I want to continue to learn, but I want to share what I'm learning with the audience, because I think people need to be thinking strategically about what's happening in the macro picture and then reposition their portfolio to be on the right end of that. And the yields right now in oil and gas are
Well,
much, much higher if you're a cash flow investor, to Bob's point, than they are in most real estate. Not saying you can't do it, but it's just there's some real options for improving cash flow in your portfolio, and putting that equity that you've got trapped in a property where the cash flows maybe not so good, and moving it into some place where you can do a lot better. So appreciate that. Bob, do you, I mean, I want to talk a little bit about the kind of things that you're doing. Obviously, you're in the mix, right? You're not just doing this for charity. What is the role that you guys have? You find the property. Are you flipping the properties? You bought the property and you're out, or are you managing the properties? How do you fit into the picture so the investors understand what they're buying and who they're working with?
We actually own the properties. We drill the properties. We operate the properties. Real estate syndicator or building owner or wants to go roll into a 1031, we handle the whole deal for him. We'll lease the apartments for him. We maintain the apartments for him. We do all the work, intermediate, and we'll be partners. We'll own some portion of the deal with him. We drill the wells with our own money. We do the gambling. Once we know we have a great well, once we know that the logs are right, once we have our reservoir engineer, David Cole, run the numbers on it, basically we have a good feel for that well. Got 4 zones in it, 5 zones in it, 2 zones in it, whatever. And if folks are interested in exploring that, we'll take our time. Okay, we'll go over every detail with them regarding how it works. And then but it's all about cash flow. I'm in the cash flow.
Yeah.
Right?
So let me translate some of that for the real estate investors in the audience. If you're familiar with turnkey property investing, you're going to find a turnkey operator, somebody like a Terry Kerr in Memphis, or many of the other people that we work with. And what they do is they go into the market and they buy distressed property. They buy property that is in bad condition. It may be in a good area. And so they take all the risk. They take on the hard work of finding the property, negotiating the deal, running the rehab, getting it tenanted, getting it producing cash flow. And then you as the investor come in and step into that, and they stay with you as the property manager. So they have a vested interest in your long-term success, unlike situations where, we've been in real estate a while. What happens is brokers, and we love brokers, are great. You need them. But often they're interested in giving you the pretty picture so that you sign the deal, they make their commission, and then they're on to the next client. And you now have to figure out how to manage that thing for cash flow. So I just wanted people to understand, Bob, that if they decided to do something like this with you, it's not just like, hey, I'm going to sell you the property and see ya,
Oh,
you're
no.
on your own, right? You're
Oh,
going to be
no.
right there with them to help actually make sure that everything happens the way it needs to happen.
We're married to the property.
Yeah. Okay. So that's a great
Not
point.
above the production.
So Brad, let's go back to you. So we've talked a little bit about kind of the concept. I think most real estate investors understand the basics of a 1031 tax deferred exchange. And we can probably get deeper into the weeds, maybe with a follow-up. We're not going to cover that today. And we see obviously the upside opportunity. We understand what's happening in oil and gas. We understand that this is kind of like a turnkey deal with PanX. So people can come in and they can bring their equity over and convert it into high yield cash flow with a partner who's got a proven record of knowing how to do that. You're out there on the front end finding these deals, which is great. We understand your role. But in all of this, I mean, let's be sober. Where are the risks? Where should someone as an investor say, okay, I'm getting a great return, but where could I get blindsided? What would you see as the downside? What should people know about that part of it?
Well, I think the first one, Russ, is price risk. Feeling that what if I get in and the price goes down? The caliber of properties that we are acquiring and managing, the economics work down to $20 a barrel. we're not at the high end. The
And we're
industry,
over 60 right now at the beginning of April when we're
right,
recording, right? Okay.
exactly. So we're buying extremely right and passing that through with our joint owners. Because in this case, they have to own direct working interest or direct assets. This isn't something a roll from a partnership. You know, there's not a partnership form. This is a custom for each individual's particular needs and objectives. That's the difference. And now we have, well, from what by the way, the company we work with very closely as the intermediary is called Petroleum Strategies. And they're online. They have some incredible informative data regarding 1031s related to oil and gas. So we're not just, we're not freestyling here. As I mean, they've done thus far around, I think it's close to $35 billion worth of 1031s over the last few years. So it's very active, and they're the ones that are telling us that the drumbeat is picking up on sophisticated real estate players now coming into the oil and gas side and other transactions. So
Well, it
that's
makes
behind
sense to me, right? Because I mean,
that.
I'm sitting here looking at it, and I can't imagine owning a piece of real estate that could suffer a 60% decrease in income and still pencil. Right?
Exactly.
That doesn't
Right.
happen. So
Right.
it's like, oh, okay, well, we got $60 a barrel and we can sustain all the way down to $20 a barrel. I mean,
Yep.
I could lose half the revenue and still have the deal pencil. That doesn't happen in real estate. I know, because I mean, that's what happened to me in 2008. My revenue went down, the equity disappeared. I was trapped in properties I couldn't get out of, and I had mortgages on it. In a lot of ways, that was high risk. And I'm not down on real estate. I mean, real estate has a lot of great
Sure.
things. It creates the very equity we're talking about repositioning. But
Yes, sir.
when you've kind of got that critical mass on your balance sheet and you're kind of shifting like, okay, I'm in this massive equity growth and now I want to cash flow, you can't go to
Mhm.
bonds. There's no yield in bonds. You can definitely go to private notes. And we've talked about that. And that's not bad. But the problem is, and it's not a problem, but you just have to be aware that in an inflationary environment, being the lender doesn't
No,
benefit you.
no.
And when you're on cash flow with something like oil, the inflation that I think most people expect we're going to see is
Mhm.
going to benefit you. It's
It's
actually, you're
good.
insulated. So it's an
Yes.
income investment, but is insulated from inflation, kind of the way real estate is, but can absorb a much bigger hit. And again, that's why I wanted to get this out to folks, because I think that there's some education they have to get through, and they have to
Sure.
understand, but there's a real opportunity here from a timing perspective. And the more I learn about it, the more excited I get about it.
Now, your question about risk, there is the kinds of risks, and we calculate these. We are really tough on our numbers. We sharpen our pencils hard. I mean, in our world, Bob and I, OPM is not other people's; it's our personal. So that's where we come from in this. And the old Churchill saying, "A play for more than you can afford to lose, and you will learn the game." We've lived that because we're in that industry thick and thin. I've sold at $140 and I've sold at $7.20 over my career, a barrel. So the risk side is reserve risk. How much is in the tank out there? We've got incredible people to do our detailed analysis, as good as there can be. So we've tried to buffer that. Operations, how the property's managed, not unlike in the real estate sector. What kind of people manage the asset? The people that work for us have been on the ground for 20, 30 or more years. They're experienced. They're not, they're really as good. We run, at least in my shop, for over a decade, we run some of the most cost-effective management prices per barrel, down to $2 to $3 a barrel, versus the big boys that Bob was talking about, at 20, 30, $40 a barrel. That's how an independent works. There's your margins. So we've got that, but that's a risk. You can't just go out and do a country club deal and an oil deal, or you'll get your
Plus,
clock.
we hooked up with Brad, and our first purchase was the BlueRidge Dome down out of Houston. We started July the 1st, all wells shut in, no cash flow. In 90 days, we had 250 to 300,000 a month cash flow, and now it's we've been as high as 400 barrels a day. Had that freeze in the winter, knocked us down about a month really, and we're getting all back lined up. but we're already in the cash flow solid position, $2 or $3 million a year income. I'd say in the next 6 months, we'll double that. But it all came from the operational talent of our team that Brad has working under him and has had for 25 plus years. These
Yeah.
guys know what they're doing. They get out there in the field, and my son, Justin, has been down there with them probably 50% of the time. And he'll call home at night. He said, Dad, we found one today. It didn't even have a screen in it. It didn't have this. It had holes in the tubing. On and on, mismanagement, misoperations of the deal. You know, you can give some people a gold ball and they'll lose the ball.
Well, I
Sure.
think again, putting that back into real estate terms, so people understand that all the time. You're
Yeah.
out there looking for that property that is completely mismanaged. There's a lot of upside just based on, you don't need the market to move, just based on just cleaning up the property, cleaning up the management, improving collections, maybe doing a little bit of value add, fixing some things that need to be repaired. And pretty soon you've got built-in equity. And if the market happens to move your way, and I want to come back to that real quick, because I just did a video yesterday with Dana Samuelson over at American Gold Exchange, and we were talking about precious metals. And you look at the historical pricing, silver has twice been around $50, and right now it's right around half that. And yet the amount of money in circulation and where the price of gold is, relative to where silver was when those two things happened, it tells you that silver is probably undervalued, but it's certainly in the middle of its historical range. Brad, you had mentioned that you've seen oil as high as $140. I remember that. That was, 10, 12 years ago, whatever it was.
Yeah.
And so when you look at the historical oil range, it's well below 50% of its all-time high right now, in an environment where they're printing trillions and trillions and trillions of dollars. And again, the need for oil globally is not abating. What happened is we had a big glut of supply at the same time we were shutting down economies globally, and that created a really temporary dip. And you guys rushed in with both hands.
That's right.
Which was like amazing. It was like watching McElroy back in the day, when in the great financial crisis. And so because I saw Kenny do that, I was watching you guys and I thought, oh, they're doing the same thing. And so that's exciting. And you mentioned BlueRidge, Bob, and I think you guys did a video or a report for us on that. So if anyone wants to learn more about that project, it's BlueRidge at realestateguysradio.com, and we'll get you that information. And so, okay, well, I think we need to probably get close to winding this thing down, but folks can follow up with you, Bob, and find out a little bit more about what you've got going on. I did have one question though, because I know in real estate that if someone does a 1031 tax deferred exchange, typically we do that into a TIC, tenant in common structure. And, depending, you can still have a TIC that's a security. And I won't get into the weeds of that, but sometimes it's a way for a non-accredited investor to get involved in a project. Do people who want to do this with you guys, do they have to be accredited in order to do that? Or is this something a non-accredited investor who happens to have some equity in a property, could they play?
We deal exclusively with accredited people, Reg D 506C. I'm not saying we wouldn't do a special product. We had a bunch of unaccrediteds, but you're dealing with all the things that come from that. And but the way we sell our product, God, if they don't know what they're doing and getting in, they're not listening. You've heard me preach. Anybody guarantees you one nickel, run, because he's not.
Yeah.
We're very hard on that. So I've dealt with unaccredited in my career. This deal here, if they have something they need to roll over, I'm sure we'd consider it. But I do like to make sure that the folks that are involved have the money and aren't hurt. I'm very sensitive.
Yeah, our friend Robert Kiyosaki, in I think one of his books, I'm not sure which one it was, but he talked about this idea that one of his early lessons in investing was that until you become accredited, there's just a whole bunch of things you're not really eligible to do. So the first mission in life as an investor is to get yourself to be accredited. And as we're here, definition of that is $200,000 a year of annual income 2 years in a row, with an expectancy of being able to do that going forward, 300,000 as a couple, or a net worth, excluding your primary residence, of $1 million. Now, those rules may change. Our SEC counsel, Mauricio Raul, has been telling us they've been floating around some ideas about loosening up the accredited investor definition and helping people be able to get into that category on non-financial criteria. That's not here yet, but if that happens, stay tuned to the real estate guys, because we'll be sure to let you know. But you'll find that it's a really fun place to play. Once you get to that status of accredited, deals like this open up. And since September of 2013, it opened up to where, you can go out on public media, YouTube or podcasts or whatever, and talk about it, as long as you're operating under the C exemption, which is what you just said you're doing. So all that's really, really good. So guys, I really appreciate the time. Brad, is there anything else that you think that folks need to know that we didn't get a chance to cover?
I just think that the types of things like you're doing here to educate, I would say that even of the real estate people that we end up meeting or discussing, or they're overwhelming Bob and them up there, is that they had no idea that oil and gas as a product you could roll into it in a 1031. They thought it was just real dirt to dirt, or et cetera. And that the idea of sector rotation, not only does it exist within the real estate market by itself, of big commercial buildings to more residential rent houses, or whatever kind of sectors there, also applies to the sectors of rotation into oil and gas as a hedge. I'm not saying to take it out of real estate, put in oil and gas, balance your portfolios. And what you do there is educate that process. So when they just emphasize, when they start to think about what their next step is going to be, don't go do a part of it and then wish you could have got back in this, because you've got to start with that designating, planning, et cetera. Get out in front. And that will take you from unaccredited to accredited pretty fast by making those kinds of more informed decisions.
Yeah,
that's
absolutely. Good stuff. So, Bob, how about you? Anything that you think that we didn't cover that folks need to know?
No, I do want to congratulate you on your conference last weekend. It's great.
Our secrets of successful syndication. Yeah, 270 folks, a lot of excited people. Many joined our mentoring program, which I'm excited about. And we've got people out there that are raising now. I mean, we've got people over $300 million in 5 or 6 years. It's insane how much money these folks are raising. So it's out there. It's out there.
And for the folks that view this video, if you haven't been to one of the conferences, you owe it to yourself. You'll walk into a group of people that the spirit is such a loving spirit, such a cooperation. It's just a neat deal. Hell, I would go it if I wasn't presenting. I would go it just for the experience. It's hard to get that many people together. And of course, they've heard me talk, so a lot of them know me. I'll sit down, we'll have a 30-minute. I got emails, Bob, thank you so much for spending 15 minutes with me. That gentleman doesn't realize it was my pleasure. That's what I do. And so Robert and Russ are just beautiful, and you do a good job, and a great job.
I appreciate that. We have a good time. Bob, now you're going to be with us on our investor summit this summer, right? In June?
Yes.
Yeah. So if you want to spend time with Bob Burr and Kenny McElroy and Tommy Hopkins and some other folks that we have yet to announce, but you're going to dig them, and all kinds of active real estate investors in various niches. It's a great time to get together with everybody, because you get a chance to have bigger conversations, longer conversations, deeper conversations, and you get a chance to watch experts talk to each other. I've learned a lot over the 18, 19 years that we've done the Investor Summit, when I watch really, really smart, sophisticated subject matter experts, highly successful investors and entrepreneurs, and these people that really understand their niche and are at the top of their game in their particular niche. When they get together as a strategist, as an investor, it helps me see the big picture. And I think that we're unique in our show in that we really put a lot of emphasis on helping people deal with their portfolio instead of just their real estate. Real estate, candidly, isn't that complicated, but managing the portfolio of debt, equity, cash flow, taxes, and then reaching outside of real estate to balance things out That's a little bit more complicated, and there's not a lot of people out there talking about it. So if this is the kind of content you like, do yourself a huge favor. Join us on our Investor Summit to see. Just send an email to summit@realestateguysradio.com. You can learn all about that. And all these emails that I'm throwing out there, they're all going to be in the show notes below. So, if you're driving or however you're watching, if you're not able to capture all that, it'll all be in the show notes. But we have lots of information for you. We want you to understand and learn what you're doing and understand what your options are. It's a fun time to be an investor. And there's a lot of good folks out there that you can do business with. So hang out with us and we'll introduce you to some of those folks and a lot of great ideas. Gentlemen, thank you so much for your time today. Very generous, and your wisdom. And I'll look forward to seeing you and talking with you again soon as we kind of track what's happening in your space.
Thank you very
Thanks,
much.
Russ.
Appreciate
Thank
it.
you.
Have a good day.
Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right. Thanks so much, and we'll see you in the next video.